Gold prices have been skyrocketing and they are making new high every day. In the last 1 year, gold has given a highest return of 48%. In the last 2 years, gold has given per annum return of 35%. And in the last 3 years, gold has given per annum return of 28%. This is fantastic. And as gold prices are going up, this is generating a lot of interest of the investors. Indian stock market in the last 1 year has given negative return. In such a scenario, investors are bound to look at gold as an investment which has done so phenomenally well. Now, it becomes also extremely difficult to invest in an asset class which has already gone up. So a lot of investors keep asking me, should we be investing at this level? Is the margin of safety good enough for them to invest in gold at this level? In this video, I'll tell you that why the gold prices have been going up, what is the future outlook, and what should investors be doing now. So gold prices started going up from around early 2022. That's when the Ukraine-Russia war started. Almost three and a half years back, the Ukraine-Russia war started. The gold prices have been going up since then. So what really happened in that war? So in that war, what exactly happened is that the US froze $300 billion reserves of Russia. A country generally has reserves for the imports and for making the balance sheet of country strong. Like in India, we have almost $650 billion of reserves. So Russia also had reserves of $600 billion. $300 billion approximately they were holding with them, and $300 billion they had to take from foreign banks and other countries. Now, US had access to those money and it froze those assets. Now, this event, I think, was one of the first action taken by the US, and it is going to be one of the most historical events in the history books of the global monetary policies. Now, this should not have been done because after this, countries, people have lost confidence on US dollar. Countries are now thinking that if this can happen to Russia, if US can freeze the reserves of Russia, they can freeze even their dollar reserves. So after this war, the central banks of majority emerging countries and even European countries have started diversifying the reserves. They've started selling dollar and have started buying gold as a hedge and as a diversification. In fact, in the year 2020, gold as a percentage of reserve of all the central banks was 12%. In the last 5 years, it has gone up to 24%. It has doubled. Even Reserve Bank of India has doubled its gold holding from 6% of the reserves to 12% in gold. This is a big diversification, and central banks still continue to buy gold and diversify the reserves. Now, if you ask me till when the gold prices will go up, the answer is till the time the central banks continue to buy. And till when will they continue to buy? It's $1 million question, and we don't know what will happen. But there are few things which tells us that there is a possibility that gold prices may continue to go up and central banks may continue to buy. So there are 2-3 reasons for that. One, there is a theme which is playing out, which is known as de-dollarization. De-dollarization is that currently all the global trade, all the central reserves majorly have dollar as a base currency. And after this tariff tantrums by Trump and this warning and using of tariff as a leverage against all these countries want to deleverage the portfolios of the money they have. So this de-dollarization is a big theme, and I think this is giving a big support to the gold prices. Secondly, US is printing hell lot of money to support its expenditure, to support fiscal expenditure. Recently, Trump has come out with one big bill known as One Big Beautiful Bill, And according to the bill, the US is going to spend additional $5 trillion in the next 5 years. And they're going to spend this by printing dollars. Because of printing, there will be more supply of dollars, and the existing holder of dollars will see their value coming down. So because of printing of money also, the dollar may lose value and gold may see the increase in price. Also this month, the US Fed is expected to cut the interest rates to boost the economy. Whenever the Fed has cut the rate, historically, the gold prices has moved up. So there are some support coming from the gold, and I think adding gold in the portfolio can be a good diversification. Allocation in the gold of up to 5 to 10% looks pretty reasonable, and there is no harm in adding that. Especially because we have seen that gold prices, they do well whenever there is a geopolitical tension. And with so much of volatility around, so much of uncertainty, gold will add stability. Yes, gold prices are high, the margin of stability is less. Maybe you already have some gold in the portfolio, but from diversification, from hedging purpose, you can still add some money, provided the time horizon is at least 10 year plus. If you're planning to buy gold for 1 year, 2 year, 3 year, it can be risky because gold prices, as I said in the beginning, will be governed by what the central banks do. And the central bank decision is highly controlled. We don't know what's going to happen over there. So this is the recommendation on gold. You can look at adding some gold for diversification. For Indian investors, we have also seen that gold adds value in the portfolio because historically, since 2008, whenever the markets have fallen, the Indian stock market, the gold has done well. 2008, 2013, 2016, 2020, whenever Indian market gave negative return, gold has given positive return. So it acts as a hedge. So that's on the gold. Keep watching the gold prices. It can be an attractive investment opportunity. Thank you.